Hey guys, hope everything is going well. You guys know that drill. Smash that like button, subscribe if you haven't, and comment down below. Alrighty, another thing is if you're interested in learning about sports cards, I have another blog on sports cards on YouTube. Check it out, AIH Sports. All right, so I will talk a little bit about sports cards, but I wanted to also tie in crypto. I wanted to look at gold and high end sports cards. I've been involved in alternative assets, specifically gold and silver, for about a decade or so. And I have had many challenges in this industry. It is probably one of the toughest industries if you don't know a lot about markets in general, just to pick up. And it takes time. It took me probably a decade, a lot through failure, right? Not through success. And I'm telling you this because I've noticed similar patterns in sports cards and also in crypto to a certain degree. And I'm just going to leave you some of my own thought process and go from there. Number one, I was when I was looking at the gold market, they always talked about, hey, negative interest rates are great for gold. So that means this is how people used to explain it. And as I got older, I began to reject this philosophy to a certain degree. That negative interest rates are bullish for alternative assets like gold, where you have, for instance, the inflation rate, or you could just say the Fed funds rate. You could say that it's what, 3%, and inflation is 8%. So you take the Fed funds rate minus the inflation rate, the CPI, and that's -5. That's negative interest rates. So that, what people would say, that's bullish for alternative assets. Now, in the past year, you've seen Fed funds rates way below the CPI, and you've seen alternative assets crack down. They have collapsed. So, just because negative interest rates worked in the 1970s doesn't mean that this philosophy will work today. And I've learned over time, if you're going to use the negative interest rate situation to figure out, hey, if Fed funds rates are this, inflation rates are this, well, you have to take it a step further. And I've talked about this in sports cards or my sports card channel. You have to look at 5-year tips and 10-year tips. For those that are interested, that want more of a explanation of that, just comment down below and I'll give you some of the videos that I've done on this. For instance, though, I'm going to look at this year. The Fed funds rate was, I don't even need to look at the Fed funds rate. Let's just look at the tips yield, okay? And the tips yield just looks at the interest rate, whether it's a 5-year or 10-year interest rate, and it compares it to future inflation expectations. I'm not sure why the market likes looking at that compared to just the Fed funds rate versus the inflation rate. Potentially, sophisticated investors may want to look at longer term trends. And they're not looking a few years from now, even though inflation is bad. They don't think inflation is going to be bad a couple years from now based on the tips. The tips yield is positive. So you could look at the 10-year yield, what it's 3.6. And I believe the tips yield right now, let me just take a look at this. 10-year tips, I think it's close to 3%, a little over 3%, but let's just see. Not over 3%, but the expected inflation rate isn't that high. And it's maybe, what, 2% or something like that. The reason why I say that is the 10-year tips right now is only 100 basis points. And earlier this year, it was 170 basis points when all these assets were getting wrecked. And once this reverses, in my opinion, you're going to get a lot of hot money come into this space. So I want to get in before a lot of guys get in, be it for sports cards, be it for gold, be it for crypto. Now, I understand that from a technical point of view, uh, the gold market may be overstretched. The bond market may be overstretched from a very aggressive trading form, but on the next pullback, I mean, this is where I want to maybe look at longer term plays. I've been looking at micro strategy. I may even get in now, right, with volatility kind of low, and I may just buy a leap call option on micro strategy where Michael Saylor, this dude that created the company, has, or he was the CEO, he resigned, but he's still going to be working on the Bitcoin acquisition space. So he still is a long-term believer. And these are companies I want to target when there is a lot of, you could say, quote unquote, negativity in that space. You know, you don't see the pumpers hyping it up. You don't see Tom Brady pumping up FTX anymore. You don't see Steph Curry talking about FTX or promoting it. You don't see Larry David talking about this. When those guys are gone, when it's quiet, when retailers are getting nervous, when people were pointing the finger at me saying that, hey, you didn't get into crypto, you don't know what you're talking about. This was crypto a lot higher. Now it's crashed down below what some people even bought it at. And I'm just thinking out loud, thinking, hey, when people are not discussing this, I may want to dive in. And also looking from the fundamental point of view, where the tips yield based on JC Peret's reports, from positive, it'll go negative most likely in the next few years. You see that situation go down. I mean, in my opinion, I want to get in before the hot money gets in and then sell when people keep on hyping it up, people point name calling. I mean, when you see that cocky behavior, you want to probably sell. Now, all the cocky people are quiet. You see on Drudge Report, I don't look at that website anymore, but they're saying that, let me look at the headline here. It says crypto teeters near abyss. These are the headlines I love. I love this because the sentiment has shifted. For outlets like Drudge, even though it's probably changed ownership, in my opinion, or something has gotten to Matt Drudge because this is not the same website as it was, but the top headline of Drudge Report, it says crypto teeters near abyss. I want to get that on my radar. I want to look at some stocks I already have. I've gotten Coinbase, little call option there. I've gotten overstock.com longer term call option. And I understand that there's probably going to be a little more volatility with interest rates. So you could see some of these stocks, some of these crypto coins go down. But my opinion, I love this. I really like this. I like what the price action I see. I like the sentiment change. I've noticed this in sports cards, gold as well. It goes down, bada bing, bada boom. All right, I see good opportunities there. Anyways, guys, I wanted you to let me know what you think. And remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.